he kind of had quite a few deals going on. And then there's other people. It's not just him. Nicolas Cage was known for not wanting to pay his taxes, and that's on the federal side as well. And those are things that came about with not even doing audits. Right? I have a friend. Okay, let me change that. We have a person that my husband knows through high school, that he came to me maybe 2003-ish, maybe 4, and asked if I could help him with his taxes. And at first my husband was just kind of like, I don't know if you should help. And he goes, well, I just need caught up. And so my husband's like, oh, go catch him up. I'm like, well, what's going on? He goes, well, I haven't filed a tax return since 1995. I'm like, yeah, well, I guess we need to catch up. He goes, well, I got this letter from the IRS that I needed to file 1998. So just to kind of let you know where the IRS is. It's 2002 or 3 or 4, I can't remember which year. He hadn't filed since 95, and they sent him a letter saying, we need to see 1998. I said, okay, well, what are we going to see when I do your taxes? Are you going to owe money? Are you getting money back? And he goes, well, I'm probably going to owe. I said, well, let's do this year's, and I think it was around 2002 or 2003. Let's do this year's, and let's do 98's. Let's get 2 years out of the way. So we did that. And he did owe money, and he couldn't pay it. All right, so I said, well, send money in with both of them. A little bit is better than nothing. And then he came back the next year, and we went backwards, and we did 96 and 2003. And then we did 97 and 2004, and then he got a letter for 99. So then we did 99. And eventually, we got him caught up. And what he was trying to get to, because he was smart, and this, I don't do his taxes anymore. I got him caught up and I was done. Because what he did is he used to have a job where he had a salary, and he got paid a lot of money. And then he now has a job where he doesn't get paid a lot of money. I don't know what he does, all right? But his salary is very low. All right? He has absolutely nothing in his name. No car, no house, no boat, nothing. But he has a car, a house, and a boat. All right? But nothing's in his name. So he owes the IRS, when I finished his taxes, he owed the IRS in excess of $110,000. And so I kind of finished it all up and got whatever year that was, 2005 or 2006, and he was done, and he was going to go figure it out. And there's something called an offer in compromise, in which you will go to the IRS and you will say, okay, I owe you $110,000. You are never going to see $110,000. I make $35,000 a year. But I can give you $15,000 today and be done. And so the IRS then decides. Now, there's a couple things that have to be in place. Number one, you have to be completely caught up on all your taxes. So he couldn't do anything like this until every year was caught up. And so he asked me about this like when he was still like 4 years away from being caught up. And I told him what it was. And then he has to give them an offer, and they have to accept it. So, I mean, he couldn't go to the IRS and say, I'll give you $2,000. They weren't going to say, yeah. I don't know what he did. I don't want to know what he did. And we haven't even seen him since then in anything. So I don't know what he got, if he ended up doing it. My guess is they came up with something. Because if he was going to make a payment of like $300 a month, if you kind of just try to do that math in your head at $3,600 a year, when were they ever going to get their money back at $110,000? So if he could come up with $15,000 or $20,000 and give them cash now, are they going to take it? Yeah. Now, I don't know what their threshold is, and I don't know how they come up with that number, but they would. Because now he's gone from 96 to 2004 or 5, showing an income level of $35,000. So he was smart. And so you get individuals like this Richard who got caught and wasn't smart, and then you get someone like Nicolas Cage who is not in jail. Okay, he did not pay taxes on an island or something, whatever it was. So there's audits, there's things that catch you. You know, this guy got caught because he wasn't paying his taxes. And then there's individuals that make mistakes and they get caught like that. So when everyone asks me, there is no specific thing that goes out there and grabs you. Some of it is just bad luck for some people, and some of it is because certain things happen. All right, so let me see if I can magically get back in here without screwing up the computer. I think that's the right one. Okay. Okay, so yeah, that's where we are. All right, so tax law sources. These are some, they're called primary and secondary. All right, so the primary are things that I think you would think about. The IRS is the primary tax source. If you're trying to figure out a ruling, the IRS code is the ruling. And we talked about this last year. When it first came out, it was a book, and now it's this room. All right, the IRS code would fill up this room. But there's also the court, judicial courts, and then pronouncements that have come out as well. All right, so those are the primary sources. Secondary sources, which are unofficial tax authorities, are things like tax services and tax articles. So these are just some of the way things are cited, and depending on which way you're going with this tax class, whether you're getting your associates or you're trying to move on and do different tax things, citations are things that you're going to have to learn to understand. Temporary regulations have the word temp in front of them, but the IRS has IRC. So different regulations have different ways of reporting what they are. And these are just more primary tax authority from the Supreme Court versus the U.S. Court of Appeals versus U.S. Tax Court. These are not things that you have to have memorized. They're more just informational things as you move forward. These are the secondary tax authorities. These are the things that you will use more for this class, or if you do the business tax research class, if you haven't done it, or if you're doing it right now with Diane Maxner, or if you do it somewhere else. These right here, these tax research services right here, are where a lot of your research can be done. The project that you will probably have here, a lot of it can be done using these guys right here as well. You can do it online. Wikipedia I wouldn't recommend, but you can also just search online for some of the stuff that I have. You just have to get it from a reputable source. If it ends up coming from like the AICPA or the Journal of Accountancy, that's fine. Those are also good resources for secondary research. They come very slowly. And then are you following what sources? And it's just important that when you look at it and you're thinking when you're doing research, what are you looking at? Because even like when I was looking up Richard Hatch, the first couple things that came up, I was like, what am I looking at? You know, like who wrote this? And a couple were blogs, and then something was on Wikipedia. And I was trying to find out how he got caught and what he was doing. So I didn't have, you know, a true resource, but I went to a USA Today article, and then I went to the Today Show. All right. He's not written up in the Journal of Accountancy, so I wasn't able to go to something like that. But I wasn't going to pull it from Wikipedia or someone's blog either. So when you're looking at things, look at the source that you're pulling the information from. Today, it's so much harder, I think, than when I did research. And I know that sounds funny because you have computers in front of you, but when we did research, we actually had to get it from a book. So when we got it from a book, you knew it was okay. When you guys can just Google it in front of you, you don't know where it came from unless you take the time to figure out what am I looking at. And a lot of times, trying to do it the quick and easy way, you pull something that's not true. So you got to be very careful on what you're looking at. Oh, and then Treasury Regular. All right. So we got statutory authorities. We got the U.S. Constitution, which is where we get our wonderful tax income, and then we got tax treaties. So we got both those. The tax amendment is what first did our tax income directly, and then the tax treaties are the different things between the different countries that we worry about. And then we have our Internal Revenue Code. I wish they'd just flow. There we go. And then, no, you don't have to know this, but how does the Internal Revenue Code work? This is why it will fill up this whole room, because this is how it goes. Instead of just saying who's liable for tax, we have to go down to all those different sub-things, because everything has changed over time. It's no longer this is our income, it's this is our tax income defined by this, and everything dribbles down. Okay, now this one I left because I think it's funny. Okay, this is actually how it works, so it's not funny because it doesn't work. But so when a tax bill goes in, it does start usually with something from the House Ways and Means Committee. If you don't know what Ways and Means is, that's money. All right, even like at my kid's school, the VP of Ways and Means is the VP over the money, the fundraising. All right, so the House of Ways and Means proposes a new tax bill. That new tax bill goes to the House of Representatives. All right, the House of Representatives then has to say that they agree with it, and then if they agree with it, it goes to the Senate. Now, there's a whole bunch of different things that happens there. Depending on what happens, if the Senate approves it, it could come back up through here. It could go over to the House Approve Act. It could come down to the President if it goes straight through. The President could assign it, and it could become into effect. The President could veto it, and then Congress could override it, and then it could still become one, or it could go into the rest in peace. All those things is like this gigantic maze. Because even though that doesn't look that easy, it's like 10 times as hard as what it looks like on there. Because nothing flows through that very easily, especially when it comes to tax. Because as you know, the House of Representatives usually is weighted more to one side, Republican or Democrat, and then the Senate is going to be weighted more to the other side. So if it gets through one of them, it's probably not going to get through the other one. And then it has to start back over again, which is why you see this wonderful thing that goes back like up here, and this one goes back over here and comes back as a revised act, which makes it go back up here and goes back around. And then the other thing, which I learned because my husband's active in politics, which I can't understand for the life of me, it just makes me want to shoot myself in the head. But when he's in Jeff City, everything gets tacked on to it that has nothing to do with that bill. They might want to, let's say they want to get rid of the St. Louis city tax. All right. So that's what they're focusing on. And they will add on to it a bill about mandating that everybody neuters their cats. And two things completely separate. So it won't go through, even though everyone might agree on getting rid of the city tax, because people don't agree that everybody should have to neuter their cats. So two totally separate things. And the bills will have like 20 things on them. Instead of just sending through a bill with one thing on it, everyone's like, well, I'll say yes to that bill if you put my cat bill on there too. It's the most ridiculous thing. So that, I love that picture because it's not anything, it's too convoluted. All right, so task with the judicial sources, the courts are the ones that actually have to enforce this. So kind of like with the Richard Hatch, he actually took it to court. He said, I'm not going to pay it. He's in jail. So that they actually have to interpret the code, and they then have to enforce any legal battles that get put in place. So there are tax attorneys. So if you like tax and you like law, you should become a tax attorney. All right. So tax attorneys go through, and they're the ones that help settle through the tax courts. The Supreme Court, just like any other Supreme Court, is the highest judicial for the tax court as well. And they do interpret the Internal Revenue Code, which to me, it takes a special court. It's not, the Supreme Court hears it, but you got to imagine if you're sitting there hearing evidence on tax law in some of those cases that you got to really understand what you're listening to. And then the Court of Appeals is the next level of authority after the Supreme Court when you go downwards. And then this just kind of lists how that works, the 3 level of courts. And then they have this, they have to stay consistent. I never say that right. Desarius is Latin. They have to stay consistently with previous rulings of the higher courts. And so they try to stay consistent. We would hope that all of them do the same thing, but that doesn't always kind of come into play. All right, and then we have more administrative. So now we're out of the tax courts, but we're looking at more of the administrative regulations. And we have 3 different forms that these go in. All right, so these are in final, temporary, and proposed. Obviously, they mean what they say. A final regulation means it's done. Temporary means it's here for a short period of time. And proposed is something that is out there that has yet to be put into place. And then we have three different purposes. One is to interpret the law, one is to, more of a procedural process, and then the other one is legislative. All right, so revenue rulings are the least authoritative. They have the least amount of weight, and they're out there basically to give you more interpretation of the tax code. So they're out there to say, okay, this is what we think is going on, and this is how we want you to understand what the code. Because the code can get so detailed that revenue rulings go out there to supplement the code after rulings are put in place. Revenue procedures go into much more detail of the IRS practices and procedures in administering the tax law. So revenue rulings go into the detail about the law. Revenue procedures go into detail about how to administer the law. And then the last one is the letter rulings. These are more specific than revenue rulings and regulations. They're specific to the actual taxpayer. That's why they're called a letter. Okay, they go actually to somebody to tell you how you should interpret that specific law. So they're all three just a little bit different. All right, they all three have their own little. Revenue rulings are just more detail. Procedures are going to be more specific about that exact ruling, and then letter rulings are going to be more to the individual, telling them how to interpret. Okay, before we do this, let's go ahead. One of the things I'm going to tell you now is that you're going to want to remember to come back to this chapter. And since we switched back to this book, we had a book when I first started teaching this class and I hated it. And then we went to a different book, and then we went back to that other book because I thought it was better information, but I still hated it. So then we came back to this book. And one of the things that since we've been coming back to this book is my tax memos have gotten a lot better. And it's because they actually have better examples of what you should be doing. So when you're doing tax research, the first thing you got to do is you have to understand the facts. So when I give you the information, the first thing you want to go through is you want to understand what are you supposed to be doing. And the only people or the only individuals that just do horrible on this are the ones that don't read what they're supposed to be doing. And it's usually because you try to do it at the last minute. All right. What am I wanting to know? And then, what's the issue? All right, what's the issue? What is the problem that they're coming to you as a CPA? What's their problem? Then, who are the relevant authorities? So where are you going to go look? Are you going to look in the AICPA? Are you going to look in the IRS tax code? Or are you going to go look on other journals? And then analyze what you can find. Then you're going to document it and you're going to communicate it. And there's a couple different ways you can do that. Okay, different types of tax services used in research. You got annotated and topical. And then research questions often consist of fact and questions of law. And so when you're doing research, one of the best ways to back up what you're telling is to state a fact. And if you state a fact by giving me a court case. If you can tell me that you believe that this will be okay, like that you can get away with not paying these taxes because of Barrett versus Barrett in 1992 showed that you do not have to pay taxes on your mortgage, okay? Or we do believe you are going to have to pay the itemized deductions that you are going to have to pay on your pension because court case of St. Louis Community College versus Sandy Cottle said that you don't get to deduct Ohio pension in Missouri. So when you go out and find an actual court case that backs up what you're trying to tell, nothing can dispute that. So that is a question of fact versus question of law. So when you can back it up with law, you're backing it up with substance. All right, and then versus sitting there with circumstance. The answer to the question. And it takes out any interpretation too, which is nice. All right, when a researcher identifies the different authorities. Okay, and then once you have different authorities, we look at the hierarchy. So this won't come into play with the research for me, but when you start having people, like when you start getting into, I have this court case and I have this court case, then you're going to look at whose court case was agreed to in the higher authority. So if you go to court on a tax issue, and your court case was seen at Missouri tax court, and yours was at the U.S. Supreme Court, guess who's going to win? She's going to win. So if hers is different than yours, your case is going to take precedent because yours is a hierarchy. So that's what they're going to look at. That shouldn't come into play with what you're going to do for me. And then once everything is identified, you have to make sure everything is still valid and up to date. You want to make sure nothing's changed. So when you lay out your tax memo, okay, your tax memo, there's an example, but I'll put it up on the board, is on 220, and I'm going to show it up here. But it talks about facts, issues, authority, conclusion, analysis. So when I go to page 220, this is a very big tax memo. They don't all have to be this big. All right, so the first thing on the tax memo is it states the date and who prepared it, and then if someone reviewed it, okay, which depending on what you're doing, there's always going to be a review. And then the subject matter. And then you're going to state the facts. What are the facts? In this case, 4 years ago, the credit union provided them with a mortgage on the home. The mortgage was interest-free. It was a balloon payment. And they reside in 11th District Court. After 18 months, something happened. Right? Those are the facts. So in what I give you, or if you're looking, what are the facts? Okay, and the example that I gave you with my parents, the facts were that they did their tax return. They filed it with the IRS software. They got a letter from the IRS saying they didn't have any state taxes taken out. They didn't have a 1099 supporting, and they didn't have any state pension that should be deducted. When in fact, that wasn't true. Those were the facts that were given. And that wasn't true, but those were the facts. So what's the issue? They did have those things. That's the issue. So we got to prove to them that they did. What's the authority? That's where you're going to list what you find. That's where you're going to list what proof you have that it's okay. Your conclusion, you put here before you put all your analysis. So what did you find out? Well, I found out my parents were right. All right? We found out they can deduct the pension. They did have a 1099, and they did pay state taxes. So that would have been the conclusion, and they were owed $2,500 or whatever that was. And then here's where I type up the detail. So in this example, because Bill and Mercedes refinanced represents an integrated step in securing the payment, their home substantially authority supports your deduction of the $3,000. But then look at all the support they had to prove it. Now, this tax memo is a full page. That's a very big typed page. Yours doesn't necessarily have to be that detailed. But it goes through, and then just look at some of the things like it talks about Section 461GI. And specifically allows the cash method for taxpayers. So it's referencing things that are specific to mortgages and being able to deduct based on different qualifications. So that is a tax memo. That's an internal memo. The whole purpose of this memo is to keep it in the file of the CPA firm. This is not the memo that goes to the client. If a client read this and got down to that analysis, they'd be like, what are you talking about? This is to keep in the file in the event that it comes back up or something happens a year or two from now and whoever wrote this, Joe, is now no longer here. One of the biggest things when I was at Reuben Brown is the working papers had to be detailed because you don't know the next time you go to do that audit or the next time you go to do that research that the same person is going to be working on it. They might not be here. The turnover at CPA firms, you're there 2 to 3 years and you're not. You move on. You're either being promoted or you're going on to another client. So you've got to have good documentation because you don't know who's going to be there the next year. All right, now the client letter, I'm just going to go ahead. I'm not going to show you the slide. I'm just going to move on to the client letter is on the next page if you have your books open. See if I can get a little bit more light on it. It's on 223. Okay, now this one, I don't quite love the format of this one, to be honest with you. All right. I believe it needs a header. It needs the date. It needs to say the date. It needs to say the client name and address, and it then needs to say Bill and Mercedes with some spacing. I think it's a little bit jumbled, all right? But then it goes through, it needs to say, the salutation and graces. It needs to say what they did. It needs to say, here's the research that I did, and here's any limitations that I had. Did I run into any problems? Here's the facts that you gave me, and here's what I found out. In all honesty, this to me is a little bit much. If a client went to read this, I think they'd be a little bit overwhelmed. I would like to see a client letter kept to one page, which I know this is one page, but if you were actually sending this to them, this would be more than one page, right? This is a one-page textbook, but this would be more. I'd like to see it kept on one page and kind of keep it where you're not going too much detail on what you did. The main thing you want to tell them is, here's what you told me, so you're reiterating the facts so you make sure you didn't miss something. Here's what I did. I did the research. You kind of key out the P1, the facts. This was a court case that was very similar to yours. And here's how it worked out. So here's what we believe. We believe you are able to deduct this. And we recommend that you do so. And then you sign it and you're done. All right, and at the bottom of this page, I believe they did sign it, yeah. And then at the very bottom it says something like, I'd be happy to discuss it with you if you have any further questions. So that's the letter to the client. So those are the two different types of letters. You got the tax memo, which goes to the file, and then you have the letter to the client, which is what you'll mail to the client. Those are two totally different things. They need to be alike in the sense that they better both have the same answer, right? You want to make sure they both say the same thing. But one should be in substantial more detail than the other one. A lot more detail. All right, so what are our responsibilities as a professional? Well, that's kind of what I was just talking about. As a CPA or tax professional, you don't even technically have to be a CPA, because to do taxes, you do not have to be a CPA. If you walk into an H&R Block or Jackson Hewitt, most of the people in there doing taxes are not CPAs. The people reviewing the taxes are probably CPAs, but the people doing the taxes aren't necessarily CPAs. But they are tax professionals, and they're still subject to rules of conduct. So there's AICPA rules of conduct. There's AICPA statement on standards for tax professionals. There's something called the Circular 230. And then there's the State Board of Accountancy standards that you have to adhere to. Now that one, if you do have your CPA, that state board is what issues our licenses. And then failure to comply with these, you can lose your license, you can be suspended, or you could be barred completely from practicing depending on what you did. So these are the penalties that I was talking about a little bit earlier. So civil penalties are the most common. They're generally money. You end up owing some type of monetary fee. And they're imposed on either the tax practitioner or the taxpayer when they violate the rules with no reason. The hard part that comes up a lot is determining, did I do it or did she do it? If you're the taxpayer and I'm the one that did your taxes, whose fault is it? And a lot of times when you get into a problem, it becomes a blame game, all right? She's going to blame me and say that I didn't prepare them correctly, and I'm going to blame her and say she didn't give me the documentation. Sometimes it's easy to figure it out, depending on what the mistake is. If it's a big mathematical mistake, there usually is not going to be a penalty. All right? If it's a mathematical and it can be shown to be human error, there's not usually going to be a penalty. If there's mathematical errors time after time, there's going to be a penalty on me. Especially with computers nowadays, there should not be mathematical errors. There are going to be typing errors if that's the problem, and that will be a penalty on me, because that means I can't type. All right, and that's probably the biggest mistake that I see coming through VITA. We have people routinely, and we had a couple this year, I think, that will bring their returns in after doing them at H&R Block. So you can go into H&R Block and you can ask them to do your return, I guess, and they can tell you how much you're getting back, but they won't do it unless you pay them. I haven't done this. I should actually probably go in and do this sometime and see what happens. And then if you want it done, you have to pay them. But if you don't want it done, you can leave. So they'll do that, and then they'll come here and get it done for free and see if ours matches what H&R Blocks does. And we have one wonderful couple, they didn't do it this year, that will like get ticked if ours is lower than H&R Blocks. And then they'll argue over whether or not they'll have us file it. When H&R Blocks is going to charge them like $350 and the return difference is $400. And it's usually because H&R Block will do something like have them use something in January of the coming year that they then won't be able to use next year. A lot of times that's some of the tactics. Why don't you prepay a mortgage, or why don't you use, and it's not illegal or anything like that, it's just something that next year they're not going to be able to claim next year. But one of the biggest mistakes we see when they bring in taxes from prior years is mathematical mistakes. And it's because they don't take the time to review, usually is the problem. It's not because they're intentionally doing it, it's just a review issue. So that's where the civil penalties are. Now the criminal penalties are much less, they're not very common, but the penalties are much higher and they can actually include prison. And that's where you're going to have the higher stakes. That's where you could see, like in Richard Hecht's case, if his attorney would have been, it didn't happen because his attorney was just trying to represent him, but if it could have become a bigger deal if his attorney would have purposely not filed his return like Richard was saying. In that case, I don't believe his tax advisor was found guilty of anything. He was trying to blame his tax advisor, but I don't believe he was found guilty of anything. You got to be very careful on the ethics side that if you're asked to do things that you don't do them, which is why I did not do my husband's friend's taxes after catching him up. And the years I caught him up, they were very simple because he didn't own anything. They were literally a W-2 and standard deduction. That's all I had to do for every year that I did, and I got him caught up, and then I was done. Because you just kind of know when someone has an income of $80,000 to $100,000 for years and years with a house and a boat, and then drops down to $25,000 to $30,000 with nothing for like the next 8 to 9 years, something isn't where it is, you know. So you just don't want to be involved in that one. All right. Now here's how you can avoid the penalty. So if the taxpayer and the tax practitioner can show that there's substantial authority, which basically means there's proof, all right, that they could support their position. Here's why they did what they did. We believed that, Richard believed that he did not have to pay taxes because he thought that the show was going to pay the taxes. I don't know. And him and his tax preparer thought that. Then if there's reasonable basis for the position and it's disclosed on their tax return. So that you don't always have to end up paying a fine. Oh, I'm not sure what I did. All right. So it's not always something that they're going to definitely have to pay a fee for. So the big thing on that one is there has to be substantial authority, and usually it's something around 20%. All right, authority. All right, so this goes back to the letter that we just saw up there for Bill and Mercedes. So Bill and Mercedes' tax return was selected for an audit, and Bill read on the internet speculation that filing a paper return instead of filing electronically and extended a tax returns decrease that they would be audited. So basically, they were selected for an audit, and he read that if you file a paper return, you have a less likely chance for an audit. Bill has convinced Mercedes that they need to use these strategies going forward to look for ways to avoid being audited in the future. So has Bill crossed an ethical boundary? So is his thought process being unethical by filing a paper return instead of doing it electronically? No, it's kind of dumb, but it's not anything unethical. It's just kind of an approach that he thinks he's going to do. Are ethics and IRS rules the same thing? No. What are ethics?
Right and wrong.
Right and wrong. Now, are they illegal versus legal? No. Okay. Now, if it's illegal, it is unethical. But just because it's unethical doesn't mean it has to be illegal, if that makes sense, all right? But illegal is unethical. They just don't always go together. And what's unethical to one person is not always unethical to another. But when it comes to, and that's just like when I talk to my financial accounting class, that's one of the hardest things in accounting. And in some things is what's unethical to one person is not unethical to somebody else. So when you sit there and you think, and I'm taking this at a very high level, taking things from the supply cabinet, is that okay? A lot of people have no problem at all being like, well, I need some pens. They take some pens, they take some home, they use them at the office, they use them at home. Some people need paper. Well, I print at home for work, I print at home, so I'm going to take paper home. No problem at all doing that. Other people would be like, I can't do that. That's work stuff. I can't take that home. So is it ethical to take supplies from work home? Okay? Exactly. Okay, so if you're going to use it for work purposes, I think you could argue that it is. I think you could also argue that some people take it home that absolutely do not use it for work purposes, but argue that they do use it for work purposes. So where does the ethics fall, right? When I was at AT&T, Southwestern Bell, it wasn't AT&T yet, we had a hard rule on the internet. Like, this was back before the internet was as easy as the internet is. You could not get on the internet at all. The only time you were allowed on the internet was usually your superior, and it was the Weather Channel, like when a storm was coming in or something like that. And we had a phone line that, because Southwestern Bell was Missouri, Arkansas, Kansas, Oklahoma, and Texas at that time. That's what they owned. And so we could call any of those 5 states with our long distance, and it wasn't a big deal. And so I would, once in a while, call my grandma who lived in Arkansas. And there were other people that, because most people that worked, it seemed like at Southwestern Bell, had family that worked at Southwestern Bell. That's how you pretty much got hired. And so they would call their other families that worked in the other states, okay? Which was a pretty common thing to do. Well, I had a friend after I left that got fired for illegal use of the computer. Now, he went to court because he said he was wrongfully terminated. And his use for the computer was a little subjective, okay? Because it was unauthorized sites that he was supposedly going to. And he denied going to these sites. He said what happened was somebody told him his name was on one of those sites, and while at work he went to go see if his name was at this inappropriate site, which he should have never done if that was the true story, okay? He should have gone to his boss, or he should have waited till he went home. But regardless, that's why he was fired. Well, during his appeal when he went to court, because he was trying to get unemployment and trying to get benefits after he got fired, because you get benefits for the first COBRA for 18 months, they started bringing up all these other reasons why he shouldn't, one of which was the phone system, that he had illegal use of the phone, and it was unethical. And they brought out a list of all these phone calls he made. And during that process, his attorney then brought in all these other people who were not necessarily for him because of his illegal use of the internet, but they brought him up there and they're like, have you ever called your brother? Yes. Have you called your mom? Yeah. Where do they live? Arkansas. Have you ever called your sister? Yeah. Where does she live? Texas. Have you called your aunt? Yeah. Where does she live? Oklahoma. Do you call people? Yeah, my friend lives in Kansas, Okay, so is it a common thing for people to call other people that live in the 5 states? Yes. So they started showing the proof, and one of the things they showed was it was unethical for him to do the computer thingy, but what they showed was the phone system wasn't unethical because everybody did it. It might be an unethical thing to do. If I used it here, it would be very unethical, because nobody here at the college uses the phone system to call anybody. Okay, we will get billed. I get a bill every month that shows everybody that I called long distance, and I have to say whether or not it was a student, if they're over in Illinois, or a 573, I have to show what it was. So yes, it would be unethical very much for me to call anybody. But in Southwestern Bell, it was a standard practice. So therefore, it was not unethical. So ethics are something that are very hard. And when you get in the tax law and you get into the tax business, it's also very hard. Because you will be pushed. If you're doing taxes and you're getting this, you're going to be pushed in a lot of different ways to push a lot of different boundaries. One of my favorite things is, and we'll talk about it in itemized deductions, is charitable contributions. When people come to you and they say, well, how much can I do? What's my max? And you're like, well, what'd you contribute? No, what's my max? Just put whatever you can put down. And I said, there is no max. There is no, limit. Well, I know, but what do most people put? Just put down what most people put. So is that ethical for me to put down what most people put down for their charitable contribution? But I get asked to put that all the time. I'm like, do you have any receipts from Goodwill? No, I didn't get any. We have a lady that came in. What did she say last year? She had $2,000 to Goodwill, but she didn't have any receipts.
I don't remember.
Remember that one? Every year she has $2,000. She had $2,000 to her church. She didn't want to bother them
So
for receipt.
if the IRS asked about these 2,000, what she's going to say?
Now that's the burden of proof is on the taxpayer. So like with VITA program, we don't have the burden of proof. So if we believe her and we are like, listen, you understand that you have to prove this $2,000 in the event that you are asked. She says yes. Okay, we will put it down. Then the burden of proof is on her. If I'm doing her taxes as a CPA and I don't believe her, then I should not do it. I should tell her I can't do your taxes. But the VITA program is a little bit different in that we don't have the same liabilities behind it. So, all right, so this week is